Hello my fellow freedom builders and welcome back to the channel on a day where yesterday the markets took a big turn down. And funnily enough, yesterday I made a video about market crashes, and yes, there will be one, and I showed you some statistics, and then the same day we had some sort of a retracement in the market for the first time in a while. And all of a sudden, this video became the best viewed video ever on my channel. I think I've had 5,000 views here for the first 24 hours or something like that. It is completely crazy, and thanks to all of you that have seen it. But I can tell you straight up right away, it was a coincidence. If you have seen the video, you know that I am, as I write here, not a guru. I don't aspire to be a guru, I don't want to be a guru. I'm a trend follower, and a trend follower doesn't really have an opinion of his own. He's just following the trend in the market. So I have gotten so many comments from you saying, fantastic how you timed that video. And it tells me a bit that people haven't seen the video, because I think 20 times in the video I say I have no clue when a market crash will come. And I'm not even sure that what we saw yesterday is going to be a market crash. I even got some really nutcase comments out there in the comment section saying that don't ever listen to Hans, he is coming up with the worst predictions in the world. Funny enough, because I never come up with predictions. I am a follower and I have an opinion about the market. But yeah, anyway, let the nutcases go wild in the comment section below. And now, when we're talking about the comment section, remember that there's only 3 days left till I pick the first winner of the silver 1 ounce coin. And yeah, remember to comment in the comment section and like the video and all that stuff down there to make sure that you are a part of the competition. So what I'm going to do today is I'm going to show you something about how to avoid losses if we actually come to a crash, because that was the next question many of you asked me, is if this is a crash coming, how can we prevent our capital from going to zero? And I'll give you some ideas today. Again, this is not financial advice. I'm not predicting. I'm showing you how I invest. You are welcome to pick up the same style, to get inspiration from it, but please don't make this some sort of guru thing. I can't stand this YouTube guru stuff. I love to teach about this, but I am not predicting anything. Alright, so let's get straight to it. First of all, on my little tip list here as to how to avoid large losses in a market like this. This is a Danish stock. I know many of you are not from Denmark, but this is a little company called Chemometic. And as you can see, it has been in a great trend. I have been in on some of it. And what I do when I saw the United States, the US market, it closed with a huge spike down yesterday. I made sure that I didn't have any automated stop losses put in the system, because it could very well be that I would have had some sort of stop loss put in here at Chemometic. And as you can see, it spiked down and it went straight up and I would have been stopped out. I do have very specific stop loss levels for my stocks. But in these cases, first of all, I rarely put them in automatically. That's a question many of you are asking me. I am spending a lot of time at the screen, but if a stock is getting closer to a stop loss level and I am to spend a day away from the computer, then I might put an automated stop loss in. But in cases like this, where I have a feeling that we are going to spike down, maybe even with some huge gaps, it's rarely that the stop loss will save us very much money, because a stop loss is only a limit sales order. But if there's no buyer at that level, it'll just keep going down the stock until it finds a buyer, and then you'll be stopped out at a much worse price. So normally, I'm simply not having the fixed stops in when I expect these huge spikes down. Because if the spike comes, I'm going to be stopped out at an even worse price anyway. So that is the first point, the first answer to many of the questions I've gotten in the comment section. Now, another question many of you have asked me is that I'm talking about this red, yellow and green zone, and I'm looking at the weekly chart to see these zones. And if you haven't seen my videos before, what I want is the RSI on a weekly basis to be above the 50 line here, the red dotted line, and I want this CRS indicator down here, comparative relative strength. In this case, I'm comparing to the SPY because we're going to look at some US stocks in a second. I want that to be above these two moving averages. When they are, I am allowed, according to my strategy, to look for entries here at the daily chart. So I might not have explained this too much in details, but I am not waiting for a red signal here on the weekly chart. Sometimes that can be fair enough if you're a really long time trend follower, but often you are losing a huge chunk of your profit, and in sideways market you can simply be wiped out. So what I'm doing is that I'm timing my entry and my exit here on the daily chart. For instance, here it could be maybe an entry for the chemometic. What I'm looking at, the black line here, is the 20 SMA, simple moving averages. Many of you are asking me, can we use EMA, which stands for exponential moving average? And yes, you can. It is just moving a bit faster because it's putting more weight on the last data set here and less weight on the first data set. But yes, you can. Let me show you some examples as to how I use this. Maybe I'm getting sent out of stocks sometimes where I would have liked to be in them, but then I can just enter again. But let's have some real-time views here of some stocks. Now, first of all, we have Tesla. Tesla is one of the stocks that I've been asked a lot about and where I have been in the stock a couple of times. Now, Tesla is a wonderful trending stock. Of course, we can see that it has been in the green zone down here from around 100, 120. Of course, this is the price after the stock split, so you should times this by 5. But let's just keep these numbers not to confuse anyone. But what you can do here is that you can enter, you get the stock in a green zone, and you can try to enter it somewhere here. That would be in 182 or something like that, when it bounces off the 20 SMA and it is on a green zone on the weekly chart. Now, you can do that, the thing where you are also exiting when the price starts to establish itself, as I call it, under the 20 SMA, meaning that it's going down below, trying to get up, but is rejected, and sometimes going down below and just keep going down. Then I can also sometimes take an exit. But what I do is that sometimes when I have a stock which price simply goes directly up and the distance to the 20 SMA is getting very far, that means that there's a big chance that if it should go down below the 20 SMA, I will be sent out with a big loss, or at least lose a lot of my profit. I've mentioned this before, but then I sometimes go to the 4-hour chart. And as you can see here, if we are taking this entry, let's just find it here. We take this entry, we have this huge spikes up, a retracement here, and we can take an entry around here at the 300 level. I actually got in, that was before the split, I got in just around 1552, I think it was, and then I wrote it up. I had a fantastic investment here or fantastic trade, but it was such a hard move that I simply chose to go to the 4-hour chart to get my exit. And my exit came, you can see it went down here, it went up, it was actually rejected here, but I didn't get out until here. So I went out of the Tesla stock here around 422, something like that. And now it continued down, but it might turn up again today. It might go straight up, and yeah, well, then the worst thing that can happen is that I miss a bit of an upturn. Now the 20 SMA is moving down, and maybe we are actually seeing a move up, maybe a little retracement, and then I'll get in there again. There's not really any problem with that. So yes, I might miss, let's say I went out here and in again here. I'm missing this area as a profit. Yes, I am. but I am minimizing my risk, and that is what all my investment style is about. That is minimizing risk. I hate risk. I love to sleep well at night. So this is the way I would take this one. Let's have a look at another one. We can look at one of these stocks that I did a video about, and that many of you have asked me if I'm still in. Now, the digital turbine here with the ticker symbol APPS, APPS, I did a video about, and again, after I made this video, people were writing to me, that was a fantastic call and I was almost a psychic, and no, I wasn't. What I did was I took a chance. We had a breakout, if you remember the video. We was in a good uptrend, we was in a green zone, so I knew that the big buyers were coming in. The price had stalled for a while and was just about the 20 SMA. And I bought it here around, I think I actually bought it in the video, or while I was recording the video, at around 15, I think it was. And it simply shot up. And that was because I bought it just before the earnings. And the earnings could as well have gone bad and the stock would have dropped. But now they were good and the price went up. And as you can see, it simply ran away from the 20 SMA. So what I did was, I took it again on a 4-hour chart here. It was up here, went down, tried to get up for a couple of bars, but I exited here around, I think it was 23, 80, 70, something like this. Now you can see it went up through the 20 SMA again, but it could not really, it tried ups and downs a bit, and right now I'm not really sure what it will do. But if it shoots up again, I might enter again at 26 or 27 or 28. I'm not sure. I need to see the exact pattern of the bars here, but something like that. So I might enter again. But this one kept me in the trade from 15 to around 23-ish up here. And that was a great trade. That was more than 50% in a few days, a few weeks here. So that was great. And now I can take my money and allocate them into something else. So right now I'm out of digital turbine, but I might enter again. Another stock I have been in for a while. I actually took a little position down here. You can see it was in a green zone. It is Storm Ruger, the weapons, as far as I recall. As you can see here, and that is kind of a funny thing, because of course I did some research. I'm through a lot of stocks, and sometimes I actually, when I look back, I know that I've been in Storm Ruger, but sometimes I get it mixed up with something else, and I'm pretty sure these are the weapons, the gun manufacturer. But sometimes people are criticizing me and say, Hans, you cannot invest in something you don't know what is. You need to know it right into the bone. And no, I don't. I do like to know a bit of what sector they are in to see if the sector is doing great or something like that. But I actually don't need to know the entire core of the business, not the way I invest. But I entered the Storm Ruger, I think it was around here at 62. As you can see, it was in a green zone. I could have actually taken it earlier. Then it dipped a bit down, came up, stalled a bit, and it kind of broke up of this little stall here. It was close to the 20 SMA, and I was lucky again that it shot up here. And this one, I was simply trading on the daily chart, because it didn't go completely parabolic. Of course, here at the end it did a bit, but it was not completely crazy. It was not like some of these completely hyped stocks. So I was in the stock. I went in at 62, and as you can see, it came up here. It went down, and it went down for a couple of days, and I took my exit around here at 78, making a nice profit. Now here it went down again, and you could argue that yes, it would have been an even better exit if I had taken it on the 4-hour time frame, because then I would have gotten out around 80. And yes, you might be right, but I am differentiating between a hyped stock that goes complete parabolic, and then you could say normal stocks that is just going up nicely. So I'm looking a bit at if Storm Ruger had done something like Tesla and simply just gotten up like this, running completely away from the 20 SMA, then I would have shifted to the 4-hour time frame. Now, is this method foolproof? Of course it isn't. I am having losses on stocks as well as everybody else. And in my opinion, a lot of the problems that many traders and investors are getting into, that's actually due to their mindset, because what many investors think is that losing money is bad. Well, losing money is annoying and irritating, no doubt about that. But if you go into investing and you are planning to never ever lose on a trade, then I can tell you that you are on the road to some really severe disappointment here. Because what I am trying to do, and there are days where my entire portfolio is blinking red all over, my plan is that when the market goes down, my portfolio should preferably go down less. And when the market go up, my portfolio should go up more. So that is the way I'm looking at it. So I actually don't have a problem with a losing day or a stock that gives me a loss, because I know it's a numbers game. As long as I follow my strategy, I'm not really affected by it, but of course we all like to make money instead of losing them. Now, the 1-800-Flowers here was one of the stocks that I mentioned in some of the stock in a video about stocks that might explode. And I think I took a position, was it around here, just above 30? Not a huge position, but it went sideways. It bounced off the 20 SMA and I was happy. It might have been a week before I took it. I can't really recall it, but it was just around the 30 area here. And what you can see right now is that the stock has, yesterday, it simply shot down through the 20 SMA. So right now I am at a loss of something like, let's just say 8.5%, something like that. That doesn't really bother me because I'm making so much more money on the winners. So the 100-Flowers might be in a loss right now, and if it continues down, you can see I have put an area here where I think it might find some support. But if it continues down, I might sell it with -10, -12%, I don't know. But it might just turn around and go up 100%. And again, I'm not predicting. I'm simply following trends and sticking to my own rules. Now, the last one, and that is one that many of you have asked me about, and that is DraftKings. I've not made an entire video about it, but I did mention it in a video. And I should say I was not in on this trend, sadly, because it was a very nice trend. But as you can see, the simple rules here would have said that we were in a green zone here, and we were allowed to buy somewhere around here. We could easily have gotten in. It doesn't matter too much if you get in one day or the other normally. Of course, sometimes they spike up, but somewhere around 17, 18, 19, we could have gotten in here, and we couldn't have ridden it all the way up. Of course, it could have been nice to get out at 44, but at this point, with a stock that goes up from 15 to goes up 100% over a month or so, I might just take it on a 4-hour time frame here and have a look at it and see, well, it seems like it is being rejected from below here, and I might have taken it off here around 36, 35, something like that. Maybe I would have ridden it a bit longer, but then I would have been sent out at maybe 35. So that is my basic rules. To buy it, I need to be in a green zone on a weekly chart. I am simply not allowed to buy a stock just because it gives a buy signal on the daily time frame. I need a buy signal on the weekly time frame before I'm allowed to go to the daily time frame. If it is a stock that doesn't have a hype history, then I just might go with the daily time frame, or I usually do. If it has a hype history, let's say for instance in the case of Tesla, we'll just find that one again, then my re-entry here was actually on a 4-hour time frame, because I knew it was very volatile, and I entered, as I said, somewhere around here simply because it went up through the 20 SMA and seemed to hold that pretty well. So on a normal basis, I'm looking for a green zone here on the weekly time frame, and I'm entering the stock on a daily time frame. Now, if the stock behaves normally and just goes up slightly, a bit up, a bit down, and just moves up, and I'm up 10 or 15% after a couple of months, then I'm exiting from the daily time frame. If it goes up like Tesla or DraftKings or some of these goes up 50 or 100% in a very short while, I shift to my 4-hour time frame. Someone asked me, could you go for a 1-hour time frame? Yes, of course you can. I just don't have the time to sit in front of the screen all day just timing my trades. So the 4-hour time frame is a great compromise for me anyway. So I hope this gives you a sense that even though the market should crash, it rarely crashes 35% in one day. I know we had a 25% minus day in 1987 when I had just started investing, but it is so extremely rare. So I normally get out of all my stocks. Well, let's say in the crash here in the spring, I was completely in cash within a week or a week and a half after the crash began. And I was only at a drawdown around 9-10% of my portfolio, and I could see the market tumble to 35%. Then it started to go up again, and I started to get buy signals. Stocks going into green zone here, giving me buy signals here. I didn't get in at the bottom, but I got in so that I am doing very, very well for this year so far. So, and if a crash comes, well, I might lose 5 or 8 or 10% of my portfolio, but I would still be in profit for the year. And I know that if the market crashes 50%, I never, ever ride the crash all the way down. Never. So that's how I do it. And the best way to keep out of these crashes and keep sane is simply not to panic. Don't panic. Have a clear set of rules so that you know when you enter a stock, that you know the second you enter a stock, what should be the criteria for you to exit the stock. I have gotten several questions yesterday. Stocks that were down, someone bought Tesla right at the top and now they're down almost 20%. And you're asking me, should I sell now? Well, first of all, I don't give buy or sell recommendation. I'm not a financial advisor. But secondly, when you ask me, it shows me that you haven't had a set of rules when you entered. And as I've said in videos before, if you are in the market right now without any rules, my suggestion is that you sell everything and you write down your rules and you don't enter another stock before you have a fixed set of rules. It could be my rules, it could be anyone's rules, it could be your own rules, but you need rules. All right, that's it for today. And I hope that the market will keep going up. Right now in Europe, it's looking fairly well. And let's cross our fingers and hope that this inflated balloon will never, ever pop. All right, that's all for today. Take care of yourself and your money. And I'll talk to you again soon. Bye for now.